Another week and more earnings, baby. You already know it. Most anticipated earnings for the week of November 18th. Going to be highlighted this time by a lot of Chinese companies, as well as mostly you're really going to see a lot of retail in here. Obviously, if we're talking about retail, last week we had a big old retail earnings in Wally World, and this week we have all the rest pretty much. Look at that. It's going to be pretty exciting for one industry at least this week, so we'll see how that goes. Let's talk about some of these companies. First Monday before open, it's really just a lot of China. Nothing that necessarily sticks out to me. I don't know who Wanda is and why what her sports are compared to other sports, but that's an interesting one. So let's go into after close. So Billy, baby, Billy reporting earnings. We got Cabot Microelectronics, baby. Ascendis Pharmaceuticals, or Pharma as you see here. As again, you never know. One of those stocks that could move a huge depending on what those earnings entail. We have America's Car Mart, Ashland Furniture Home Store, Ashland. I don't know. More retail. ZTO Express, a Chinese company. Cornet Digital, Woodward, and guess what? Another Chinese company. Tuesday, though, is when we start getting into the heaters. So Monday, I'm not too interested in. I'm sorry, Monday. We don't like Mondays anyways. Start of the work week, we don't like Mondays. Let's go Tuesday before open, baby. This is some heaters right here. The fire is burning. Home Depot. I love me a nice Home Depot. Very nice company. Been making plenty of money off Home Depot and earning a dividend in the meantime. I love Home Depot, so we'll see how they're performing. It'll be interesting to see how they perform. Obviously, normally their performance is somewhat seasonal based, so we're winding down in that time of year, so they get a lot more business during times of natural disaster and stuff like that, where people have to rebuild, which is tough to say that you look for that, but obviously you don't look for it, but it is beneficial for their sales at least. Kohl's, company I have quite a few shares in. Kohl's, I love Kohl's. They pay a nice dividend, and they've been a killer lately. I will say at one point this stock was twice the value that it was, in which time I did not sell because I thought it was going to stay up there, but I really like the dividend, so I didn't sell it, and now it's, still up a little, quite a bit on the position, but if it goes down from earnings, which I don't think it will, every Kohl's I've been to is always, there's always people there. Seems like they're a little bit too large, but there's always people there. Never a time where there's not people enjoying a nice Kohl's location. But we'll see how those earnings entail. If the stock goes down, I'll definitely be looking to add more. Same thing with TJX. Certainly a company that I've looked at. They're a nice, consistent dividend payer. I like them. So we'll see how those earnings go. We have Medtronic, definitely a stock to look at. I'll look at that. I'll see how those earnings look. We have TransDigm, Maximus, Jinko. Gotta love a nice Jinko. These aren't the jeans, but they're Jinko. Endava, Aramark, and Eagle Point. Maybe take a look at Aramark. We'll see how that one looks. Eagle Point, I'm not sure what Eagle Point is, but sounds pretty cool, I can tell you that. We got Pag Seguro. That's right. Urban Outfitters, we got some more retail, baby. You know how it is. Urban Outfitters. Alcon, Esco, and you know what? A Chinese company. A lot of those. You want to talk about real heat? Look at Wednesday, and you're going to find some heat. This has some heaters. So before market open, we have Target, as the fancy people like to say it. Those of us who don't make that much money will typically say Target. But once you get a little bit your income, I would say the line is right around 50,000 per year in terms of just your personal salary. Once you hit above that 50,000 line, you typically transition to saying Target. This is a scientific study I've performed, so trust me, it's true. That's going to be a huge earnings to look at. Obviously, they typically tend to mimic what Walmart's doing. They're a very successful company, and they always rock it. Obviously, we always want to look at e-commerce when you're looking at Target. That's really kind of what's driving that stock is growth right now, which, trust me, Target is some growth. There's maybe a chance that right now I have doubled my money in the position, and I'm not selling. I love Target's dividend. They just keep being consistent. I'll enjoy that dividend. I'll sell out when I need to, okay? And hopefully I don't have to, and we can get the stock to keep going up. Another beautiful dividend payer in Lowe's reporting earnings. Again, it'll be similar, probably looking at that in Home Depot. Home Depot, if it performs well, you'll probably see Lowe's go up Tuesday during the day. Or if it goes poorly, you'll see it go down during the day. So it's been very related to Home Depot and reaction, I believe. So hopefully Home Depot has a good day, so Lowe's has a good day. I used to own Lowe's shares, and I sold out of those. That was back in my initial days. It was one of the first stocks I bought. And that was when I started investing, and I wasn't necessarily focused on the long term, and I lost out on a lot of money selling, but I definitely made money on the position, and I tried to claim it, and I could have been getting dividends this whole time and getting a nice return in value. But to each their own. Chinese company, Kiwi, Avaya, Viomi, and Spire. You know Spire. You see their dang vans everywhere. People are always driving the Spire vans, and every time I've seen someone driving a Spire van, guess what? They suck at driving. Maybe not. That may be an overstatement. But I see Spire vans everywhere. So after close, there's a very interesting one that I will want to point out here. We have NetEase, not the interesting one, but my interesting one here is Sonos. So Sonos, if you don't know, they make wireless speakers, Bluetooth, and they are an interesting company. Recent IPO within the past year, a little beyond a year, I think, at this point. Since IPO, they're a little bit below what they opened at. They're not a company. They originally were making positive EPS. Right now they're in the negative, but it's not like a significant amount. Sonos is an important one to look at for me. I think I'm really excited about these Sonos earnings. If you've seen their products, they're very cool. They do have some products where they actually, as the name might imply, I don't know if it's necessarily why they did it, but obviously it's similar to Sonar, and I'm going to say that. So their speakers are some of them are intelligent enough to adjust based off of the room that you're in. So it uses those waves, sends them back, and it reports on what the shape of the room looks like, so it knows how to direct the sound properly, which is really cool. I've seen some very, very good reviews on these products. I've never actually personally heard anything from them or used them, but they're a really interesting product, and they're kind of taking the world by storm right now. I don't know if that's necessarily true, but guess what? I think Sonos right now, it's about a $14 stock. If this thing goes down, I want to be buying into Sonos pretty heavy, I think. I'm pretty excited about what they have to offer, and I think their product is real nice, and I think there's definitely some long-term value. So we'll see how it does throughout the week, but I'm definitely putting it on my watch list. Definitely look at Sonos earnings because, shoot, they could be pretty cool. We have, after close, we have Jack in the Box. Jack in the Box. Sorry, I was watching some Disney Plus, and I found out the kids section, and I remember this show from my childhood called Out of the Box, and that was the theme song, but it was not Jack. It did not say Jack in the Box, but let's see how Jack in the Box does. How many people are getting a freaking big Jack? What's it called? Big Yak? No, Big Jack. I think it might be called a Big Jack. I don't know. I haven't had Jack in the Box in absolute years, but we'll see how that goes. Everyone loves their tacos, which I think taste like cardboard, but that's because they are cardboard. But some people like them, so good for them. We have L Brands, baby. Good dividend payer right there in L Brands, but the stock's been hammered lately over the past year, so definitely something to look at. Maybe that thing could bounce back based off of those earnings. I've had a couple rough earnings coming up. We have Lazy Boy. Lazy Boy from their chairs for the most part. I am not using a Lazy Boy chair because usually Lazy Boys tend to be relatively expensive, but they're a nice chair. We have Starbulk. Don't know anything about it. Cubic, SQM, Nuance, and Pennant Park. That's right, Pennant Park, baby. Thursday, we have, before open, Macy's dying company. So we'll see how that goes for Macy's. If they report good earnings, this stock could shoot up. It all depends for them because they have just been absolutely hammered with fears of bankruptcy and who knows. But all I know is it's an interesting stock. But over the past 5 years, down somewhere around 70%. I don't know what's going to happen to this company, but we'll see. We'll see if it gets bought out or goes bankrupt, whatever it might be. We have Baozun, BJ's. Never eaten at a BJ's personally, but I like the name, if you know what I mean. We have Anaplan, Berry. What kind of berry do you think it is? Brightview, Brady. Not the company owned by Thomas, NFL's greatest player of all time. In terms of wins, okay? Maybe not the most talented, but we got Evo Kua, Stage Stores, and that is a logo which I am very much not familiar with. After close, we have Splunk, similar to, yet again, I'm watching Disney Plus. Saw holes on there, similar to Sprunk. Was that a thing? Was that what it was called? No, it was called Splooge. No, there's no way it was called Splooge. That's disgusting. There's no chance. Regardless, it reminded me of holes. So Shia LaBeouf, who's a scumbag. Splunk, don't know what Splunk is, but I'd love to see now. Nordstrom, good dividend payer. I'd love to see what happens with that stock. We have Intuit. You know them from what you do after you go a little bit reckless in your trading and you have to use TurboTax so you can just import your portfolio. So that way you don't have to worry about the tax implications and they can do all that math for you. But thank you, Intuit, for saving people who are reckless day traders. Stone, rocks. Let's go, baby. Stone. We have Gap. Again, it's going to be an interesting one to see what that looks like in terms of earnings. It's not necessarily a thriving company, so we'll see. Ross is in a similar boat. For me, Ross is a budget Kohl's, which is fair to say. Usually get a little bit cheaper products, but Ross stores usually relatively busy. But actually, it's Ross Dress for Less, not just Ross. So just make sure you know that. We got Williams Sonoma, Pure Storage, in case you love storing shoes. What? I read the next one, Shoe Carnival. Shoe Carnival, I feel like there's no reason to have a dedicated shoe store, in my opinion, so this one is, I don't like it. Lananta Pharmaceuticals. And guess what? Another dedicated shoe store reporting earnings on Friday. The Foot Locker, which usually just gets a lot of its deals just by having deals with certain players, or athletic players, and the such, and the like. We have Schmuckers. They make a mean jelly or jam. I don't personally partake in jelly or jams that much, but they do make a mean jelly or jam. Smuckers. We got Hibbett Sports. It's another sports company. Sorry, we got one that's too blurry to read because this is an awful image. We got Atcore. We got Frontline. Buckle. Talk about some more retailers. Some high-end retailer this time. Buckle. We all know if the lady's rocking the buckle jeans, she's got a sugar daddy, or she's got some money, or she's in debt. It could be either one. But they're expensive. I know because I have a lady, and trust me, buckle jeans are expensive. If you've ever been to a buckle store, if you're a cheap person, you might faint because yikes, expensive. IEC Electronics and a Chinese company, and America Airsports, baby. I drew this one out a little bit. I was too talkative today, and I'm sorry for being so talkative, but there's some good earnings to watch this week. Look at Sonos. That's my spotlight of this week. Look at Sonos, baby. I might be buying some shares.